Hey guys, so you're pitching a VC and the VC asks you, are you focused on growth or on profitability? Now, if you want to know the answer, stick with me now.
Ask Alex. Ask Alex. Because you don't know what you don't know. And if you don't know, now you know.
Yeah.
So what does the investor mean when they ask you this? This is the same question we just went through in the previous video. When will you be profitable? But it's phrased differently. Frankly, there is something a smarter investor would ask, and at a later stage. When you will be profitable is something a neophyte traditional investor playing big boy tech investor would ask. If you're talking to American investors, it's more likely that they want you to focus on growth. Growth is all that investors care about. If you respond to profitability or at profitability, they may wonder if you really are a venture capital type business or founder. Like, do you get how this works? I wouldn't ridicule the notion of being profitable though. Being profitable means that you're default alive rather than being default fucked, dead. Default dead means you're dependent on investors, and that's not where you want to be. Default alive gives you negotiating leverage when you're trying to get a deal done. The simple answer, however, to this is growth. Why does growth matter so much? Well, more growth means a bigger company. VCs need big exits for their business model to work. I'm going to explain two useful heuristics that apply to SaaS companies. 3T2D and the rule of 40%. Now, 3T2D, this means that you triple for 3 years and double for 2 years. Once you're about 1 million in revenue, recurring revenue. Now, the rule of 40%. This means at scale, after the 3T2D, basically, that you add up your bottom line margin, meaning negative number, and your top line growth, ideally positive number. Now, if they add up to 40%, you're good. So as an example, you can break even, like zero profit margin, if your growth rate is 40%. Investors want you to be at least 100 million ARR. So check out how the numbers work if we go according to plan, starting at a base of 1 million, and be amazed by the power of high growth and compounding. Now, if you want to see the graph, this is on the dedicated blog for this. It'll be in the link below. So it's a good excuse for you. Head over to my site and actually check it out. Okay, so what do you need to say? We're trying to build a real business with fundamentals. But we are aware that we are building a venture capital funded business. I have studied how analysts value publicly traded companies too, and it's clear that the highest R squared is towards growth. So what do you think our focus is? It's growth. But we're going to be frugal where we can, because do you know what? Bezos, one of the richest men in the world, he's shown that your margin is my opportunity. Now, being able to get profitability, if we need to, is something that we have to consider. And we have considered it, of course. We want to stay the course, and being able to flip to profitability would give us great optionality if the landscape happens to change. Now, but look, the key milestone we're gunning for is 100 million in ARR in 5 to 6 years. Okay, guys, I hope that was useful. If you want to learn more, head over to my blog, alexanderjarvis.com. There's a whole bunch of awesome tools and learnings for you to be a more awesome founder. Bye.